So, welcome back to WealthWise Banking. I'm Jason,
I'm Jeremy.
and together we're talking about the infinite banking concept. This week, we're going to dive in to the problems in our financial landscape. There's so much chaos, there's so many booms and busts and things going on in the world that makes it really difficult to understand. So, we're going to walk you through some practical examples and we're going to identify the problem as we see it. And we're going to tell you why that matters to your wealth building, your wealth creation, and your wealth keeping over the long life of your family financial plan. So, Jeremy, let's just jump right into it. Let's talk about today, like Nelson said, if you don't know what the problem is, you won't care about the solution.
He also talks a lot about headwinds and tailwinds in his book, right? And it's very fitting for me being a pilot. I understood that analogy quite well. But in understanding the problem, a lot of it comes down to controlling the banking functions of your life, right? Just there's the answer to the test, is not having control of the banking functions of your life. But what are these underlying challenges, these hidden challenges that are out there that a lot of people don't realize is affecting their lives? If you look at the financial headwinds that are out there, headwinds, if you don't know when you're flying, I want you to think of just not even a pilot sense. Think about going running in a store. If you go running into the headwind, it's going to slow you down, right? It's harder. Where if you have a wind at your back, it's a lot easier. It's the same analogy of flying. It's also the same analogy of finances. And there are certain financial headwinds out there that are going to slow down your ability to build wealth and grow that over time. Those quiet destroyers of your wealth are taxes, their fees, their interest payments, right? A lot of folks say it's your lifestyle choices. I don't want to talk about your lifestyle choices. In fact, infinite banking shouldn't impact your lifestyle at all. Like, if you want to go out there and buy your pumpkin spice lattes, we encourage you to do so. It's all these other wealth destroyers that are truly the things that we have to tackle. If you think of your finances, Jason, think of your finances like having a bucket, all right? You have this bucket out there, and every single month, you fill that bucket up with money. And as the month goes on, you keep looking in this bucket, and you're like, what's happening? And if you turn your bucket and you look from underneath it, you start noticing that there's little holes. There's holes in it. And those holes,
I thought my kids had come in and put their hands in the bucket, or maybe my wife. I was like, what's he talking about? I thought people were reaching into my bucket, but you're saying there's holes in our buckets.
holes in your bucket.
Okay.
And you have and your money's leaking out of the bottom of it. And one of those things would be taxes. When I say taxes, I'm not talking about the taxes like your federal and state income taxes, right? Those are two big ones. But what about your property taxes? What about the tax that you pay, like your sales tax, when you purchase your groceries from the store? How about the gas tax when you go fill up your car? The cumulative taxes. When you think of all the different taxes that you end up making up, but how much percentage-wise do you think your income goes to just paying taxes? Cumulative taxes.
If you're asking me, I know our friends north of the border pay about 43%. So that makes anyone from America feel a little better. But I want to say that we're probably somewhere, I was trying to find the actual number, but I would guess we're 30, 34, 35% cumulatively.
We're a little closer to the folks north of the border, actually.
Really?
Yeah, they are. And if you look at the cumulative taxes that you end up paying, and again, it's different for everybody, right? As a real estate investor, if you're a professional real estate investor, a lot of the things that you have in taxes, you get back at the end of the year, right? I don't want to call write-offs. I'm not a CPA, but there are certain things that you're able to expense, so to speak. What about interest? If you think about, when I say interest, if you have student loans, right? What's the interest you're paying on that? What about the interest on your credit cards? How about the interest on if you're financing a vehicle? How about the interest that you pay on your house, like your mortgage interest? The cumulative interest. So we talk about cumulative taxes. What about cumulative interest?
And as soon as you said that, the first thing I was present to was how I operated before I found out about infinite banking. I would literally look how much I was earning and how much I could afford based on how much I earned month to month. I was living month to month, and I was wondering, why am I only having enough money to live paycheck to paycheck almost, even though I was making close to $200,000 a year? It's because I said, oh, we can afford this truck. Oh, we can afford this car. Oh, we got to afford this house. because I am married to an Ecuadorian and they like to come stay for 3, 4, 5 weeks at a time. And doing an 1,800 square foot house is not fun when you live in a frat house. So, but the thinking I'm speaking to is when we look at our life from a short term perspective, it's very hard to have long term success. And so I wasn't even thinking cumulatively. I would just look and say, oh, 3.25% on the Ford. Good deal. Okay. 3.5% on the house, 30-year mortgage. Good deal. Right. And I would just look at those stats and not think anything more of it other than this is how much I can afford, and then be happy to pay that interest to somebody else. But go ahead and dive into that leaky bucket that you're talking about a little bit more, Jeremy.
And I'll reiterate this. This is something you should remember too. It's not how much you make, it's how much you keep, right?
Yeah. You know, we're not suggesting that anyone here do not pay your taxes. We're not talking about tax avoidance. You go to jail for that. We're talking about only, we're not financial advisors. We're not CPAs. We're not attorneys. We are just two dudes that practice infinite banking. But we're saying that you must understand the rules of the game that you're playing, and then you can play better than anyone else. And we're going to outline the game that you're playing here today.
Yeah. So looking back at it, I did a little bit of research for this episode, and the statistics pulled out that the average person out there, if you add up all the cumulative taxes, the cumulative interest, this is just taxes and interest that they're paying over the course of their life. By the life, they actually defined it as adult life. So they did effectively like 35 years. So it was like their adult working life. It's $655,000. That's what they pay cumulative taxes and cumulative interest over the course of their adult working life. Now, we in the infinite banking world, we practice something that allows us to recapture a lot of that interest, right? I saw this before I implemented infinite banking, and I was going back through to kind of validate these numbers. Would you say like 3.5% for your vehicle or your house, right? I pulled up one of the very first investment properties I purchased, and it was back during COVID. And my effective interest rate on it was 2.25%. Wow, that's pretty awesome, right? We're not seeing that these days anymore.
Yeah, that's good.
I looked at that, and it was amortized over 30 years. So I had a 2.25% interest rate amortized over 30 years. But do you know what my effective interest rate on that 2.25 is over a 30-year period? 38%.
38? I would have guessed like 3 times as much because I know a little bit about mortgages and things, but 38%. That's what you said.
And it actually says it right there in the loan documents. It says that over the course of this loan, you'll end up paying 38%. And if I pull it up, I'm actually looking at it right here. The total amount of interest that you will pay over the loan term as a percentage of your loan amount is 37.763%. About 38%.
That is insane. That's insane. But I have a question for all the listeners. Listeners, if you're hearing Jeremy and we're talking about leaky buckets, and yes, I'm saying that you probably have a leaky bucket if you're not practicing what we're teaching you, because we're talking about headwinds. We're talking about flying into a perpetual headwind and wondering why we're not getting ahead. And Jeremy asked something or said something, and I just want to know here, and please comment below, please email us, please have conversations with us, but who here listening would like to have an additional $655,000 back into their pockets over the course of their professional adult earning life? Does that sound attractive to anyone? I'll take it. Jeremy, can you write me a check for $655,000 and send it down here to Florida?
I will, but I'm going to charge the interest.
That's it. That's thinking like a bank right there. He's like, yes, I will. How much interest do you want to pay me? So continue. I just want to know who here heard what you really said and understands that the information is available for you. And it's, by the way, it's legal. Everything we're teaching you is legal. It's been around for a couple hundred years, and we're just offering the education so you can learn how to implement and do what the wealthiest makers of money are doing in our country, which, by the way, is also the evil empire, which, if you're wondering who that is, Jeremy, tell the people who the evil empire is. And a little hint from the Yoda Jedi on the wall. Who's the evil empire, Jeremy?
It's all the dares and critters out there, and everybody with their sticky little fingers.
Sticky finger banks. That's what Jeremy's calling them. He's called them sticky finger banks. Imagine, everyone, you're driving down the road, maybe listen to our podcast, or you're working out, or you're doing something. Imagine you get paid, and you put the money in your pocket, And all of a sudden, everyone comes up behind you. They're not groping you, they're reaching into your pockets and they're taking all your money and they're keeping it for themselves. And we are okay with that because we have signed up for that game voluntarily. You've made that choice.
So, $655,000. We discussed what a lot of folks don't realize is amortization. And can you explain what an amortized loan is and explain to our members why Jeremy, who has an effective interest rate of 2.25%, if I hold on to that loan for the whole 30-year period, I'll effectively pay 38% on that loan. Can you explain that?
You know what? I would love to be able to explain that, but I only know one person here that is good in the sheets because this guy, every time I look at one of those amortized tables and try to figure it out, I can't understand it. What I do understand is that loan, the way I understand it, is that loan is compounding over time. So effectively, because you're paying so much on the front end towards the interest, and the companies intentionally do this because guess what? They want the money back that they've loaned you, the liability that they've loaned you for whatever asset you have. And eventually, way down the line, when you most likely moved or sold the thing, you start paying the principal. That's how I understand it. But mathematically, I don't have any idea how 3.25 or 2.25% can turn into 38%. Like it blows my mind.
So you actually hit on a lot of really good things there. You're right. Amortized loans, whether it's your mortgage on your house or your student loans or your boat payment or whatever it is, the interest is front loaded. It's front loaded so that way the banks end up getting paid back faster, right? So they front load the interest and then you start chipping away at principal on a slow basis, whatever the loan terms going to be. But you said something very key there, and it's they want to front load that interest. And I'll know if you realize that this is one of the reasons they do it is because how often do people typically move?
I actually know the answer, but I would love for people to pop in the chat below, be interactive, tell us how often you moved in your life, just based on your life. Because I know for me, it's average probably every 5 to 7 years. Like we've been in this home 7 years, and we are already looking forward to our next home, right? And I think that's the average numbers, 5 to 7 years. And if anybody has a mortgage statement, a 30-year or 15-year, do not, I beg you, do not go look this up because you'll feel awful. And why will they feel awful, Jeremy?
Because the moment that you end up moving, you start the process over again. You start that process over again, and you're going to start paying more interest over and over and over. Whether or not you refinance the house, you're going to have to move it, just right? The moment that you set that up, there's a reason that banks keep asking you, do you want to refinance or you could pay less on your current note, or you have so much equity in your house, let's refinance. Because they want to start the clock over again. Your boat, your student loans, whatever it is, all that interest is front loaded. And that's how you can effectively pay 38% on what's advertised on 2.25.
And that is crazy. And the other part that we were talking about, again, I'm just inviting you, if you've been in a home for 1, 2, 3, 4, 5, 6, 7 years, do not go look at your mortgage statement because you're going to see that you're paying somewhere between 70 and 80% to interest right now, just factually. And the banks are brilliant. So why infinite banking? Why are we inviting you to get on the infinite banking bus with us here at the WealthWise Banking Podcast? Because we have been shown what the game is. And we feel like it's our duty as men, as leaders, as part of this community to bring this to you and say, hey, if there's a better way and you could turn that headwind into a tailwind, would you want to know? Would you want to know?
Well, let me ask you, let's just do something simple real quick. How about this? If you could recapture, so let's say $6,000 a year in taxes, right? How about we optimize some loans? You get $6,000 a year back in interest. Wouldn't that be great? Let's say that you found a couple inefficient loans out there. You were able to get another $6,000 back from restructure. And effectively, you put $18,000 a year back in your pocket. What would you do with an extra 18 grand a year?
Well, I know what I would have said in my previous answer, what we'd love to do with 18,000, as far as things we want to buy, places we want to go. But when you start understanding the game of cash flow, right? When you start thinking, like, I actually got here in kind of a sideways way of getting here from reading Robert Kiyosaki's Rich Dad, Poor Dad, right? And he talks about infinite banking and second chance. And I've actually seen emails to some of our peers where he's just talking about the power of infinite banking and literally outlining, hey, this is where your savings goes first, dot, 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 how you make an and investment and different things. But long story to get there, like I thought, wait a minute, I am someone in the quadrant where I am trading my time for money. My money is not working for me, folks. I had lazy money. I had lazy money and not cash flow. So what Jeremy's asking is, how would it feel to have recaptured some of that money that's leaving your leaky bucket, coming back to your life? My offer to you would be to start thinking about how could you move that money to start making you more money, whether that's putting it into something that we're teaching here, which is the specially engineered whole life, where it's guaranteed to grow forever, where it's protecting your family, where it's growing away from the government, where it's doing all the things that we would want something to do in terms of our financial portfolio, right? And that would be the first thing that I think that you were leading me to, but I don't know. I'll turn it back over to you.
Yeah, so most folks can actually just optimize. We're not talking about going out and earning more income. We're talking about optimizing cash flow here. Getting $6,000 a year back in taxes, $6,000 a year in hidden fees, $6,000 a year in interest owed, just optimizing your cash flow, 18 grand. But let's say for, giggles that you said, hey, I've got a honeymoon or an educational expense or a big debt that I got to pay. I need 18 grand. Jeremy, I got to go out and make $18,000. And the investor in me, you looking at it from your point of view, the investor in me is like, all right, how can I do that and reasonably expect to get all my principal back and make 18 grand? Well, conservative investment, well, let's just say at 6%. Do you know how much money I would have to invest at 6% to make $18,000 for that year? The answer is 300 grand. I'll need to come up with $300,000 to invest at 6% to make 18 grand. Or you can just optimize what you're already doing and start putting that money back in your pocket. Start recapturing, plugging up the holes in your leaky bucket, right? Start getting a financial tailwind behind you. Start recapturing the taxes. Start recapturing the fees. Start recapturing the interest. We're not talking about going out there and making more money. We're talking about just simply optimizing what it is that you're already doing.
And that's it.
That's what you're looking for.
Yeah, when we talk about this, we're talking about today what the problem is. We're identifying what the problem is for the average American. And the average American is giving away, and this has been true for the last 40 plus years. We're giving away about 34 to 35 cents of every dollar we earn to some other family, And all we're saying is if you learn how to plug that financial leakage, you can turn around and bring that 34, that 35 cents back to you. How much of a difference? Like, think of a scale. You got a 0 point, you got a negative 34, we'll make it negative 35, and then you got a positive 35. We don't have to be math wizards to know what the spread is there. How many cents is that? That's 70 cents. That's a 70-cent turnaround. So if you guys look at that and just think of that over time, it doesn't happen instantly. What we're teaching you is a marathon. You're not going to plug into this unless you're someone that can capitalize and get way ahead of it. There's different situations. It's all specially engineered. But the point being is once you start applying the principles we're teaching you, again, it's not an investment. We're teaching you the most important business in the world, right? The most important business in the world. Now, you're used to, if all the world, like Shakespeare said, if all the world is a stage, we're used to being the depositor and the debtor. That's what Jeremy's been talking about so far. He's taking out loans to do this. He's taking out this percentage. What we're telling you right now is the most valuable players in this game are actually the owner of the bank and the banker. And that's how you start plugging the leaky holes and start understanding the game we're playing.
So we kind of did tiptoeing around it. We identified some problems, right? The problems are fees, interest. Where do you put your money?
Well, we put our money in these foundational companies, these mutually owned dividend paying companies, because they've been around longer. Again, we're identifying the problem early, and we didn't come out and just say it, but I'm going to say it. The banks are not your friends, period. the central banking system, the fractional banking system, it is the reason for the booms and busts. We're going to dive into that more. But since I've learned about this concept, the concept of infinite banking, we are partnering, right? We're partnering with mutually owned, dividend paying whole life companies. And we're only partnering with ones that A, support infinite banking and practitioners, and B, who have been profitable every year their doors have been open, right? So we're talking somewhere between 119 and 170 years. Where all four of our contracts, our family contracts, they've been profitable for 148 years consecutively, never missing. Jeremy, what are some of the things that have happened in the last 148 years? That's since 1877. If anybody needs to look it up.
Yeah. So we've had two great wars, right? World War I, World War II. We've had the Great Depression, Great Recession, .com. Oh, most recently, COVID. So, I mean, there's been a lot. There's been a lot that happened.
Yeah. We've also had, coming off the gold standard, we've had the introduction of the IRS. We've had a 7,700-page book written about taxes, right? So we've had all of these things. We've had introduction of qualified plans. We've had the introduction of pensions. We've had the introduction of other vehicles that are set up to be an investment like what we're teaching you, but they're called ULs, VULs, IULs, right? Just a regular old UL. Those are all things that have happened while this institution that we're offering, that's been used by the Rockefellers, the Rothschilds, the Morgans, the Stanleys. You talked about Walt Disney previously. You talked about Ray Kroc, right? Talked about the Pampered Chef, J.C. Penney. You have all of these different people that have utilized this. Tony Robbins talks about this, right? This is not a secret. Joe Biden, our sitting duck president, right, was literally used this to fund his campaign.
How about Jen Barlaw for all of our football lovers out there?
There you go. I mean, these are all things. And when you start, it's like when you see your favorite car, right? Say you're looking at a new color in a car or a new model of a car, and you just can't wait to see that car. You're going to be the first one to own that car. You buy that car, and then what happens, Jeremy? You see it everywhere. All of a sudden, you start seeing that car that you've never seen before in that color. Because why? Because our minds can only filter so much. There's so much information coming at us. So when you start understanding what the truth is, it's a little bit like the Matrix, the red pill and the blue pill. Once you have escaped the Matrix, it's very, very hard to go back and see how things used to be. Now, again, since we're just introducing these concepts, right? We're just telling you what the problem is today and sharing some of our research into this. Like Jeremy's brought me things I haven't even heard before, as far as the 2.5% turning into 38%, right, for an amortized loan, and how that's leaky bucket. And we've also talked about the one that we haven't touched on, which is kind of crazy considering where we're at right now, is if you have a family and you drive anywhere and your family eats, what about inflation? What about, we talked about COVID. Will we talk about the printing of money, the trillions of dollars that have been printed? Mostly people think inflation is just a raise or a rise in the cost of goods. But that's not what's happening at all, is it, Jeremy?
No, it's not. It's a devaluing of the currency.
It's a devaluing of the currency. And so when we talk about some of these things, our money is the most valuable it'll ever be today, right? So, I mean, think about this. How many here, and pop this in the chat, how many of you feel like you don't pay enough taxes? Jeremy talked about the percentage of taxes we're all paying, but who here listening to us feels like, hey, Uncle Sam, dude, hey, bald eagle guy, I don't think I pay enough taxes. Could you come tax me a little bit more? Could you? Well, I mean, does the government make money, Jeremy?
The government does not make money. The government actually relies on taxpayers for money.
Wait, the government doesn't make money. It has the biggest payroll in the world, in our country at least. They don't make money?
They don't. They rely on us. The government has a problem, not necessarily an income problem.
Yes. The government, if we looked at it, I've seen a couple of different exercises, and we'll break this down another time, I'm sure. I just feel like it'll be an episode. But the government actually has been bankrupt every year, and they just keep going more and more bankrupt. Go to usdebtclock.org We're at $34 trillion in debt. In 2 years, in 2026, we'll be $44 trillion in debt, which is 10 trillion more. 10 trillion is a lot of money, folks. And guess who gets to pay for that debt?
Me, you, your kids, your grandkids.
Yes, the unborn generations of your family that haven't even thought about being here or been thought of or dreamed of. And what we're talking about is how do you protect those generations in the future by controlling their money? How do we just pay Uncle Sam one time like we want to because we're good American citizens? But then how do we take back control and make this a you and me level where now you're doing business with folks like Jeremy and myself and other people who you know, like, and understand? And you guys are growing in a shared mission. You're building wealth in a shared way because we're both owners in the same mutually owned dividend paying company that's been around for 148 years. Like that is where I'm putting my money. And I even had my accountant tell me, Jason, why did you put so much money into the specially engineered whole life? Do you know how much extra taxes you'll pay? Why would I lock my money up in financial prison? Why would I put my money where I couldn't use it for another 10 and a half years at that point? For another 10 and a half years without penalty, when I can take control of that money today, I can pay taxes when taxes are historically low, and I can utilize that money and have that money not only protecting my family, not only buying my legacy, guaranteed, but also putting my money in a place where it's growing guaranteed tax-free.
Well, and here's something that's important. Your CPA or accountant clearly doesn't understand what it is that we're doing. Again, it's not an investment. He was comparing this to an IRS-controlled 401k or IRA, wasn't he?
But they were thinking, yes. I mean, their thinking was, how can I reduce your taxes right now? How can I reduce your taxes right now? Which is a great thing to think. How do we not pay Uncle Sam more? But the way that we've been conditioned into reducing our taxes is to take it and put it into a qualified deferred, which means like, hey, Uncle Sam, you want to be my partner? Hey, Jeremy, you want to be my partner? You said yes to banking, but how about we're this kind of partner where I'm just going to lend you some money. And then later on, you're really young, you're in your 30s. So when you hit your retirement age, I'm going to come to you. And depending on how I live my life, right, how wise I was with my money, I'm going to come to you in that moment and say, Jeremy, I need 40% of my money back, please. 45%. Depending on how I've behaved financially, I will just tell you later what you're going to owe me. Would you want to be my partner?
No, especially when that's a time when I probably need the money the most, right?
But I'm so nice.
My non-working years?
But I'm so nice. I'm so honest. Like, I'm a good dad. I'm a good guy. Like, I'm your good friend. Why don't you want my money now? And I'll just tell you what it'll be later.
I would rather pay taxes on the seed, not the harvest.
Man, this guy's smart. So everyone else, we're agreeing to that agreement without even thinking through it because it lowers our pain point now. And if we're living paycheck to paycheck, lowering that pain point now seems like a necessary thing to do. And so all we're saying is, what if the way we're doing things wasn't the most optimal? We're not calling it wrong. We're just saying optimal to suboptimal. And like really the reason why we're here with all of you and inviting you to get on our infinite banking bus is that we have seen the truth over the last couple of years. We both have a background in things that have taken a lot of discipline, mentally, physically, emotionally, to get there. And we're telling you this is so much easier, but it's going to take a little bit of research and education, and more importantly, taking radical ownership and believing that this could be true. If you believe this could be true, then don't you owe it to yourself and your future kids and grandkids and generations that come past that to go and find out if it is true or not, like Jeremy did?
Yeah. So I'll tell you, one of the reasons, you kind of mentioned it a couple of times, if you guys, our listeners they don't understand what infinite banking is, we're effectively using a properly structured, specially designed and engineered whole life insurance policy designed for banking, not for debt, but for banking. And we're doing it with a mutual company. Now, why do we do it? I do it personally because I have guaranteed, uninterrupted compound growth. I can access all my growth and my dividends tax-free. I have complete control over this. My cash value is backed by the insurer's reserves and the asset protection behind it, because again, I'm an investor. That cash value in many states is protected from judgments, liens, and bankruptcies. So to just sum it up, the reason I like this vehicle is it predates a 1913 IRS tax code. I get all of these benefits behind it, and I'm able to use the specially designed banking policy, effectively a glorified savings account that I can then leverage out to go and pay off debts, optimize my cash flow, take care of a lot of these financial headwinds and turn them into tailwinds that are accelerating my growth and building a legacy that lasts. So if you don't understand infinite banking, it might have taken us a little bit to get here, but that's what we're doing, folks. That's what we're doing. And if you continue to, tune in and subscribe week after week, I'll talk to you guys about taxes. Jason's going to talk to you guys about how it affects these 10 million fathers that are out there, how you can use it for benevolence, how you can use it in so many different facets of your life. But this is what we do. This is how we're doing it. And this is more importantly why we're doing it.
And here's a wild claim, Jeremy. I'm going to put this out there for the listeners. We are going to make this the biggest infinite banking podcast and maybe financial podcast in the world. Like, we're going to bring this to the next level. Now, that sounds like a big, crazy goal, but so is 10 million followers and their families to be inspired and educated. And here's another thing. I use this in some of my Zoom calls, and luckily I had them on it wasn't planned. But what I'm going to invite you right now is infinite banking is a process. You must read Becoming Your Own Banker by R. Nelson Nash. It's a must if you're going to work with us, to learn from us. This is the man who changed my life on a massive level, to the point where I'm here sharing and working and partnering with Jeremy, right? But what it is not an investment. It is not something that you're coming to look to make a spread, to make a return on investment, to be cool, to go and do this. You've got to put on your banking glasses, and you've got to, if you couldn't see me, if you're just listening, I put on my cool sunglasses living down here in Florida, but now I'm putting on the glasses I can see you in. So it is becoming a banker. It is the most valuable business that you will ever be in. And it is the second business after the business, however you are adding value through your goods or services and helping others reach their goals, that we're offering for you. So we're almost at the end. Jeremy, anything else? Any final thoughts?
No, but again, it's a process. It does bridge the gap between saving and investing. It's a both and asset. You don't have to choose whether or not to go out and invest. You can use this to invest and secure that principal. And if you continue to tune in week after week, I actually have some really exciting things where I do compare an IBC policy to the last 3 years of the S&P 500. And we look at the actual rates of return. So I've got some fun, exciting things that are planned for future episodes. If you guys continue to like, subscribe, and share, and all those other fancy things. But yeah, it's awesome. And it's drastically changed my life. It's changed your life. It's changed thousands of our members' lives. And I'm really excited to continue to share with them.
Jeremy, that was so well said. And folks, again, unless you understand the problem, the solution just won't matter to you. That's R. Nelson Nash. This episode of WealthWise Banking with Jason and
Jerry.
And we talked to you today about what the infinite banking concept was. Again, subscribe to the channel if you haven't. Smash the like button. And we will continue sharing this process. Invite others to come on this infinite banking bus with you. Take back control of your finances. Join the WealthWise community. And let's build something amazing on the you and me level. Again, thanks for being here. Thanks for giving us your most valuable resource. We'll see you in the next episode. Be blessed.